In the world of finance, there's a sinister three-letter monster that everyone knows, but almost no one truly understands. APR. Hidden at the very bottom of your credit card statements and buried in the fine print of bank advertisements, this acronym is actually the most important number determining how much freedom you will have for the rest of your life. Most people, when they get approved for a credit card, only look at the limit. Some glance at the interest rate. But almost no one realizes that APR, annual percentage rate, is a mathematical prison. Banks sell you APR as the cost of borrowing. In reality, APR is a secret contract where you surrender your future labor, your time, and your children's inheritance to the bank. Today, we are declassifying the dark math the financial industry never wants you to understand. The predatory nature of APR and how this number was engineered in a lab to keep you in debt for a lifetime. Welcome back to the Mortgage Trap, and today, we are tearing down the system's biggest lie. 1. What is APR and why do we believe the annual lie? The human brain fears large numbers but is vulnerable to small percentages. Why do banks express APR as an annual rate? Because 24% sounds much more manageable than 2%. If they told you, you will pay us 2% of your wealth as a tribute every single month, you would revolt. But when they say 24% APR, it feels distant and theoretical. But here's the biggest trap. While APR is presented as an annual rate, it is never calculated annually. The industry's dirty secret is the daily periodic rate. They divide your APR by 365 and process your debt every single 24 hours. While you're sleeping, cooking, or in a meeting at work, the bank's supercomputers update your balance every midnight. This is a stopwatch of profit for the bank that never stops. While time passes for you, for the bank, it is simply a tool for accumulating interest. 2. The dark alchemy of compound interest. Albert Einstein famously called compound interest the eighth wonder of the world. He said, "He who understands it, earns it. He who doesn't, pays it." Credit card companies turned this quote into a business model. If you are in debt, compound interest is a financial cancer. With credit cards, APR is usually applied using daily compounding. What does this mean? Today's interest is added to tomorrow's principal. You aren't just paying interest on the money you spent. You are paying interest on yesterday's interest. Your debt grows like a self-feeding organism. If you don't zero out your balance every month, the bank begins to build a mountain of debt for you. And every stone in that mountain is stolen from the hours of your life that you will never get back. 3. Minimum payment. The system's perfect ambush. Why do banks demand a minimum payment of only $100 for a $10,000 debt? Do you think they are being merciful? On the contrary, they are cold-blooded mathematicians. The minimum payment amount is so cynically balanced with the APR that nearly 90% of what you pay goes toward the interest accumulated that month. The principal, the actual debt, barely moves. Consider this. If you only pay the minimum on a $5,000 debt with a 29% APR, it could take over 30 years to pay off. For a $5,000 TV or vacation, you end up paying the bank over $25,000. This is not a purchase. This is a vow of service to the bank as a financial slave for 30 years. The minimum payment is that thin, fraying rope that keeps you on the edge of the cliff, but doesn't let you fall. The bank doesn't want you to finish the debt. They want you to keep paying that interest tribute forever. 4. Penalty APR. Hyenas. Waiting for you to stumble. The system doesn't expect you to be perfect. It actually wants you to fail. Hidden among the thousands of words in unreadable credit card agreements lies a monster called Penalty APR. If you miss a payment by just one day, or accidentally exceed your limit by a single dollar, your promotional 18% APR suddenly skyrockets to 29.99%, or in some cases, 34%. This isn't just a late fee. It is a permanent genetic modification of your debt. Once you reach this level, your debt multiplies so fast that you have to take on extra jobs just to cover the interest. To the bank, you are no longer a reliable customer. You are a data point to be milked to the bone. 0% APR and the deferred interest trap. 0% APR for 12 months. This sentence is the most effective cheese in the mousetrap of modern finance. People accumulate debt during this period, buy luxuries, and think it's free money anyway. But no one tells you about the deferred interest trap. If you fail to pay off the entire balance by the end of the 12th month, even if you have only $1 left, the bank retroactively calculates all the interest from the last 12 months, starting from day one, and slaps it onto your bill overnight. That 0% turns into a $2,000 interest shock the moment you wake up. The bank never gives you free money. They only grant you a false sense of security to lead you into a bigger trap. 6. Why isn't APR taught in schools? This is a critical question. In school, we are taught biology, history, geography, and complex trigonometry. But why is the calculation of APR, or how to read a credit card statement, not in the curriculum? The answer is simple and brutal. Financial illiteracy is the primary fuel for the banking industry's profits. If every high school graduate understood the real cost of APR, credit card networks would collapse. The economic system wants you to think in terms of monthly installments. The phrase "only $99 a month" is a mask hiding the reality of the $15,000 total interest you will give to the bank. The system doesn't want you to be wealthy. It wants you to be a compliant consumer. 4. Penalty APR, hyenas, waiting for you to stumble. The system doesn't expect you to be perfect. It actually wants you to fail. Hidden among the thousands of words in unreadable credit card agreements lies a monster called Penalty APR. If you miss a payment by just one day, or accidentally exceed your limit by a single dollar, your promotional 18% APR suddenly skyrockets to 29.99%, or in some cases, 34%. This isn't just a late fee. It is a permanent genetic modification of your debt. Once you reach this level, your debt multiplies so fast that you have to take on extra jobs just to cover the interest. To the bank, you are no longer a reliable customer. You are a data point to be milked to the bone. 0% APR and the deferred interest trap. 0% APR for 12 months. This sentence is the most effective cheese in the mousetrap of modern finance. People accumulate debt during this period, buy luxuries, and think it's free money anyway. But no one tells you about the deferred interest trap. If you fail to pay off the entire balance by the end of the 12th month, even if you have only $1 left, the bank retroactively calculates all the interest from the last 12 months, starting from day one, and slaps it onto your 9. How to fight this giant. Guerrilla finance. The system may be rigged against you, but you don't have to play by their rules. Here are the tactics banks hate. 1. Velocity banking. The moment your paycheck hits, deposit the entire amount into the card balance before the due date. Since interest is calculated daily, the less time you keep the balance in the card, the less tribute you pay to the bank. 2. Statement. Balance versus current balance. Many people feel safe because they pay more than the minimum. Wrong. If even 1 cent is carried over from the statement balance, the bank charges retroactive interest on all your purchases for that month. The rule is simple: either pay it all or don't use it at all. 3. A PR negotiation. If your credit score is above 700, call the bank. Say, "Another bank is offering me a lower APR. Either lower my rate or I'm closing the card." This single phone call can save you thousands of dollars a year. 4. Balance transfer. If you are drowning in debt, use 0% APR transfer cards. But beware, if you use that card for new purchases, you fall back into the trap. That card should only be a lifeboat. 10. The big picture. Why doesn't the system change? Finally, we must understand this. Credit card debt and high APR are not bugs. They are features. The American and global economies are built on consumer debt. If everyone paid off their debt today, the banking system would collapse. Your debt is someone else's asset. The APR you pay fuels the jets, the luxury buildings, and the massive profits of bank CEOs. They want you to stay in debt because a person in debt cannot take risks. A person in debt cannot quit their job. A person in debt cannot raise their voice against the system. A PR is not just a financial rate, it is a mechanism of social control. A PR is not just a percentage. It is that relentless division operation that shows how much of your financial future belongs to you and how much belongs to an institution. Banks don't want you to watch this video or learn this math. They want you to stay focused on monthly payments and reward points. But now, you know the truth. Once you see this monster in the dark, you can never look at it the same way again. You are in the right place to tear down the walls of the financial labyrinth and escape the mortgage traps, the APR shackles, and credit card slavery. If this video opened your eyes and you want more deep analysis of the system's hidden mechanics, like this video and share it with your loved ones so this financial virus stops spreading. Subscribe to The Mortgage Trap. Turn on notifications to reclaim your financial freedom. Remember, the system doesn't want you to be rich. It just wants you to be a permanent participant. In the next video, we will examine why your credit score is actually a loyalty and obedience index for the banks. Protect yourself because this math was not written to protect you.